I actually think this is one of the best times to buy Bitcoin and crypto that I can remember in recent years. I think a lot of the risk in this market has been de-risked and the market is just sitting on the sidelines waiting for the election. But my core view is that crypto has already won the election. Regardless of what happens on November 5th, Washington is moving in a more favorable direction for crypto. And I think it's just a matter of times before the market moves to new all-time highs. It's really just this tsunami of institutional assets that are coming into this space. And you can see this in the Bitcoin ETFs, which are back to pulling in $500 million in new flows every day. We have positive direction in Washington. We have institutional investors allocating. We have the ETFs heating up. We have rising concern about debt and deficits. All of that, to me, spells six-figure Bitcoin. And my guess is we get there by the end of the year of $1.1 million Bitcoin by 2033.
Since March, Bitcoin's price has shown some predictably bounded behavior, trading within a range defined by its all-time high of around $73,000 and a lower threshold around $50,000. Bitcoin has repeatedly approached that peak but hasn't broken through it, a behavioral pattern Hougan attributes to investor psychology. Many holders appear willing to sell when Bitcoin hits that all-time high, feeling it's a safe point to take profits. However, Hougan argues this is only a temporary hurdle. Eventually, the supply of investors ready to sell at that level will be exhausted, allowing Bitcoin the potential to break out into new price territories. The next price target Hougan mentions is $100,000, a significant psychological level. He predicts that if Bitcoin surpasses the all-time high of $73,000 and continues climbing, it could make a rapid move toward $100,000 without encountering much selling pressure.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Yeah, here's what I see when I look at the chart since March. Bitcoin has been trading in a range between the all-time high around 73,000 and about $50,000. And it seems to bump its head against that all-time high repeatedly and can't get over it. And that makes some behavioral sense. I think there are a lot of investors out there who are willing to sell at the all-time high. They like the idea of getting out at peak prices. But eventually, we're going to exhaust the demand to sell at that all-time high. The Bitcoin ETFs are vacuuming up record assets. We're seeing rising retail demand. And one of the reasons I think it's an interesting time to think about getting off zero is once we exhaust that selling at the all-time high, where will Bitcoin stop? In other words, if we get above 73, if we get to 74, 75, who is selling? I think the next major stopping point for Bitcoin is $100,000. I think that's where we'll again bump into people who are willing to sell. But between the all-time high of 73 and change and $100,000, I see a little bit of an air gap. I think Bitcoin could rapidly make that space if we do get above these all-time highs. Look, I think we're going to get there by the end of this year. That's obviously conditioned on what happens in the election and the immediate aftermath in the election. That's a prediction and not a promise. But if you step back and you look at this from a 30,000-foot perspective, we have positive direction in Washington. We have institutional investors allocating. We have the ETFs heating up. We have rising concern about debt and deficits. All of that, to me, spells six-figure Bitcoin. And my guess is we get there by the end of the year. If not, I think certainly in 2025, we have a high probability of seeing a very strong market in Bitcoin and indeed in other crypto assets. From my perspective, where I sit, I actually think this is one of the best times to buy Bitcoin and crypto that I can remember in recent years. I think a lot of the risk in this market has been de-risked and the market is just sitting on the sidelines waiting for the election. But my core view is that crypto has already won the election. Regardless of what happens on November 5th, Washington is moving in a more favorable direction for crypto. And I think it's just a matter of times before the market moves to new all-time highs. So I'm sitting here biding my time, but extremely optimistic about where we're going in the next few months. Look, I'll point to AllianceBernstein, which had a note out of $1.1 million Bitcoin by 2033. For people who don't know, Bernstein is a $1 trillion asset manager that's well known on Wall Street for having some of the best research in the space. And I raise that because not because I'm aligned with 2033. I think it's possible we get there earlier, but just because that possibility of seven-figure Bitcoin is now openly being discussed in the most august halls of the leading research shops on Wall Street. And, if we go back in time when Bitcoin was a few $1,000s, the idea of $10,000 Bitcoin seemed extreme. Right now, I know with Bitcoin trading at 70, the idea of $1 million Bitcoin still seems like a fantasy to many people. But you can do the math and you increasingly see TradFi investors doing that and saying that's a possibility. When will we get there? Will we get there? I don't know, but it's now sort of within the Overton window of what people are considering possible. And I think that says a lot about where this industry has gone and where it's going in the future. It's really just this tsunami of institutional assets that are coming into this space. And you can see this in the Bitcoin ETFs, which are back to pulling in $500 million in new flows every day. I will say, Bitwise does something like 10,000 meetings with professional investors every year. Over the last few weeks, there's been a sea change, sort of a phase shift in how those meetings are going. In the past, maybe 1 out of 10 of those led to an allocation. I will tell you anecdotally that over the last 2 weeks, as I've been on the road, the number of those meetings that have led directly to people deciding to get off zero has increased significantly. Wow. So the big catalyst to me is just this wave of institutional money coming into the market. It's accelerating. You can see that in the data. And I expect that to accelerate even further as we turn into 2025. Yeah, absolutely. Look, it's a very volatile asset. It's always scary to add a very volatile asset into their portfolio. It's a new asset with regulatory risk. You don't get to be the best performing asset in the world over the last 1, 3, 5, and 10 years without having significant risk. Even those of us who are extremely pro-crypto have to recognize that we don't know what regulation will look like exactly. We don't know what the future will hold. So I think there is still some hesitance, and maybe there's still some sort of vestige of reputational risk for these professional investors. It's not yet mainstream to allocate to Bitcoin. You're sticking your neck out, and that's not what traditional finance does. That's sort of fading over time, but I do think that reputational risk still hangs in the mind of some of these investors. But on the other side, they see these inevitable trends. They see the growth in institutional adoption. They see BlackRock building a big business in it. And you're starting to see that scale shift to where they feel more compelled to allocate and more risk in not allocating than they do from staying on the sidelines.
Hougan doesn't limit his insights to Bitcoin alone. Ethereum, he notes, has also gained legitimacy with its institutional adoption and regulatory clarity, especially with the establishment of Ethereum-based ETF. Other cryptocurrencies like Solana remain under more scrutiny, particularly concerning security classifications, which introduces greater regulatory uncertainty. In the context of the upcoming U.S. election, Hougan points out that if certain candidates win, the regulatory outlook for crypto could shift rapidly, potentially benefiting the altcoin market. For instance, in a Trump presidency, there might be a quick overhaul in SEC leadership, leading to potentially more favorable regulations for altcoins, which could prompt a short-term rally. Alternatively, a Harris victory would likely mean a slower path toward crypto-friendly policies, which could lead to market uncertainty and cause altcoins to experience short-term struggles. However, Hougan believes that in the longer term, the regulatory climate will eventually turn neutral to positive for crypto, making temporary dips buying opportunities for long-term investors.
Because I think a lot of us, when we talk about Bitcoin, make sort of a lazy argument. We say something like, Bitcoin is becoming digital gold and the US is abusing the dollar, so Bitcoin is valuable. And what the CIO memo said is that's actually two arguments in one. So one bet you're making when you invest in Bitcoin is that Bitcoin will continue to mature and stand shoulder to shoulder with gold. And if it does that, if it matches gold from a size perspective, even at today's prices, you're talking about $900,000 Bitcoin. The other bet you're making is that the US will abuse the dollar. It will pile on debt. That will happen in governments around the world. And the size of the store of value market, the size of the inflation hedging market will grow. The reality as an investor is you only need one of those to be true. The US could not abuse the dollar. Bitcoin could just continue on its journey from sort of idiosyncratic retail asset to mainstream institutional asset. And you could be looking at a 10x in your position. Or the government could abuse the dollar, continue to pile up debt, and the size of the store of value market could grow, and you could see a Bitcoin position double or triple or more. The beauty of it is those two compound. If we see both of those, as I said in my CIO memo, we're talking eventually about seven-figure Bitcoin. And that's my sort of core response. So the answer to the question was, no, the US doesn't need to abuse the dollar. The dollar doesn't have to fail for Bitcoin to get to $200,000. All we need is for the trends we've seen over the last 10 years to continue for another year or two. And I have a high degree of confidence that will happen. But if we get both of those events, which honestly, looking at the facts on the ground, seems probable to me, man, it's Katie bar the door. It's sort of the really optimistic scenario that Bitcoin investors have been waiting for. And that's, I think, where we're pointed in 2025, 2026, and beyond. So that's what I tried to convey in that memo, just breaking that one argument into two so people could understand the real drivers of Bitcoin's growth. Yeah, it really does. I think if you get beyond Bitcoin and Ethereum, which have already made it through the regulatory window, they're already ETFs, they're already being used by mainstream institutions. You start to get into a territory where there is more legitimate regulatory risk from Solana on down. There's less clarity on how they will be regulated, whether they are securities in the view of the SEC or the CFTC, and who wins makes a big difference for that market. In a Trump presidency, we know he's said he'll fire Gary Gensler on day one. We can expect a new SEC regime relatively quickly, which means I think we'll see a strong altcoin rally. In a Harris victory, look, I think we're going to get to this new regulatory regime eventually. Harris had made some very positive comments about crypto. That's the trend where Washington is moving anyway, but it's going to take longer. We won't have that immediate turnover, that immediate flipping the page. There will be more uncertainty, and markets dislike uncertainty. So I think those altcoins could face a short-term struggle in that event. I would say that might be a buying opportunity if your window is a few years out, because I do think Washington has broadly flipped and turned to a neutral or pro-crypto view. But I think the market may interpret a Harris victory as a loss for altcoins. It could give sort of a pullback that if you have a multi-year horizon, could be an interesting moment for you. Yeah, I think crypto equities are in a really exciting space. You have the miners who are benefiting from the sort of dual jetpacks of crypto and AI demand. You have Coinbase, which somehow maintains its near monopoly position in the retail space, an incredible business. You have MicroStrategy doing its thing. Look, there are a lot of investors out there who are still uncomfortable holding Bitcoin and Ethereum directly, and they're looking at these crypto equities as, an alternative way to get in. I think particularly if you look at Coinbase, that company is executing extraordinarily well, not just across its core business, but across what's going on in Base and their view for the future. I think it's hard to look at a stock like that and not be excited about where it could go in 2025.
Hougan also touches on the performance and potential of crypto equities, companies directly tied to the cryptocurrency industry, such as mining firms and exchanges. Miners, for instance, benefit from growing demand in both AI and crypto sectors. He highlights Coinbase's resilience, noting that its dominant position in the retail crypto space makes it a promising investment avenue for those who may be hesitant to hold cryptocurrencies directly. With such companies achieving impressive growth and maintaining strong market positions, crypto equities offer traditional investors a way to gain exposure to the crypto market without directly holding digital assets.
Please like and subscribe my channel.